Good day, everyone, and welcome back to the CryptoArsenal. And today we'll be talking about 3 points. Because in the previous video I talked about how Bitcoin is king, and that actually a lot of the altcoins actually follow Bitcoin's pricing. In not pricing actually, sorry, in terms of Bitcoin's movement of price. So we'll be talking about 5 reasons why altcoins actually follow Bitcoin's movements. I'll be talking about the Bitcoin halving as well, and also slightly a bit about the Bitcoin white paper. Okay, so without further ado, let's begin. Okay, so why does Bitcoin actually affect other coins? So today, in this website, there's actually 5 pointers here that I would like to talk about, and it's actually really good information for everyone to know about before we start trading. Okay, so first point is that Bitcoin historically was the base currency in crypto trading pairs. Alright, so in the past, there were not many types of cryptocurrency, and Bitcoin was the first and the largest. And similarly, reliable stablecoins were not widely available until late 2017. So some of the stablecoins here that are widely stable and known is Tether, USDT, USDC, and let's see what else do we have here, like DAI, Binance USD. So these are a few stablecoins that traders actually use nowadays to hold their crypto and then reinvest back into other cryptos that they would like to buy. So in the past, it made sense that on most centralized exchanges, all crypto trading occurred versus Bitcoin. So in the past, there wasn't like BTC, USD prices and this kind of thing. It's all like ETH/BTC. So there are actually charts for it if you look up in it using TradingView or whatsoever. Okay, so this actually created a dynamic by which new investors needed to fund their trading accounts first with Bitcoin. So by them buying Bitcoin to fund their account, this would actually increase the Bitcoin price. And then after that, when Bitcoin is used to trade for alts, it will actually increase the altcoins price. So therefore, this leads to a high correlation. Alright, so that is the first reason. Okay, the second reason is that Bitcoin represents the crypto industry, so this is actually very general. It's the biggest and largest coin, as you can see in coin market cap. You can see that the market cap is currently like 1.08 trillion, and Bitcoin's dominance up here is 48.5% now. So Bitcoin actually dominates like most of the market. Okay, maybe slightly less than a half, but it's still the biggest dominator with about a market cap of $5 to $3 billion as of today. Okay, so that's the second reason generally, and the third reason is that Bitcoin is actually a market sentiment indicator. Alright, so the fact that Bitcoin affects other coins is not a hidden phenomenon. Everybody knows that. Yeah, if you are new in crypto, you should know that as well. It's largely accepted as a fact. So it's common and rational to regard BTC's price movement as an indicator of the general market sentiment, because it's it represents the crypto industry, and because of the past, therefore, it is just the general market sentiment. So, for example, if Bitcoin price suddenly jumps, many traders will quickly purchase altcoins in the expectation that altcoins prices should soon follow. So when we are trading, it's all about emotion sometimes, but yes, we always tell people that don't let emotions get the better of you. But we being humans, we are just emotional, and that's why successful traders are always they know how to control their emotions. But of course, I myself, I'm not a successful trader yet. I'm just like you guys, just starting out, haven't really started, so we shall see what happens. Alright, so that is point number 3. And reason number 4, Bitcoin denomination. So actually, many crypto investors and traders have a long-term belief in Bitcoin. They understand the high probability that Bitcoin will outperform USD over a multi-year or multi-decade time frame, and then therefore they would like to choose to measure their portfolio value in BTC as opposed to USD terms. And if they trade altcoins, their default position will therefore to trade it back to BTC, which increases the degree of correlation between alts and BTC. Okay, just giving you guys an example. So in TradingView now, I'm at Bitcoin USD. So let's say, for example, now you have ETH USD, am I right? Okay, let's go over here. You can see the ETH USD curve, but then there's a ETH BTC curve. Alright, so this, you can see there's actually quite a difference, okay, how ETH is correlated to Bitcoin. So as of now, ETH is kind of performing not too bad against Bitcoin, because the all-time high of ETH's performance over Bitcoin is like at 0.15779. Yeah, and currently now it's at 0.06, more than the halfway point, so it's not too bad. So this is how actually traders used to measure their portfolio in BTC value as opposed to USD terms. So even though the price of Ethereum might be going up in terms of ETH USD, it might not be going up in terms of ETC BTC. It really depends on the performance of both cryptos, which is going up faster at which point in time, or which is going down faster at which point in time. Either way, it will affect the charts. Alright, okay, and last but not least, it's BTC clones. Okay, so when Bitcoin is created, it's the first crypto, so many innovators would, they want to find things that are better than Bitcoin. They'll try to go for Bitcoin's weaknesses. Sorry for that. Okay, they'll go for Bitcoin's weaknesses. So therefore, it's just very clear that no matter what, many altcoins such as Litecoin and Bitcoin Cash were made. So therefore, they are actually really, really similar to Bitcoin and probably have a faster transaction rate than Bitcoin in terms of timing. And because of the similar proof of work consensus mechanism, it therefore stands to reason that Bitcoin's reputation and price increases, their clones also would experience this. So yeah, so these are the 5 points, guys, on why altcoins would generally follow Bitcoin. Alright, okay, so now let's move on to the Bitcoin halvings. Okay, so why is Bitcoin so valuable and so scarce? Okay, as all of us know that Bitcoin has a max supply of 21 million Bitcoins. Okay, if you guys are new to crypto and you guys do not know, Bitcoin has a max supply of 21 million. So no matter what in the world, there's can only be 21 million Bitcoins, and therefore because of this cap supply, it's just gonna make Bitcoin keep increasing, because the demand for Bitcoin, I mean, I don't know the demand for Bitcoin, but it just seems that it's always wanted. Therefore we have this massive pump in prices and all. Okay, so why is it that people would wanna get more Bitcoin, and why is it so scarce? And it's because of these halvings that happen every approximately 4 years. Okay, so as you can see from this website here, Bitcoin actually launched in 3rd January 2009, and where the first block has not even been mined. Okay, so every time when a miner mines a block, when Bitcoin just started, it gets 50 new Bitcoins. So when the blocks reach 210, it actually gets halved. So in every 210 blocks, the reward of the block is always cut into half. And so you can see in the first 4 years of Bitcoin's time, 10 million Bitcoins, 10,500,000 Bitcoins have already been mined. And in the and once the first halving started, the next 4 years only produced 5,250,000 Bitcoins, and so on and so forth. So now we are actually reaching the 4th halving soon, and expected is about April 2024, and which would cut down the Bitcoin's block reward to 3.125, which can only produce 656,250 Bitcoins. So as you can see, that the number of Bitcoins that are coming out is lesser and lesser every 4 years, and this causes a spike in prices most of the time according to history. Okay, so Bitcoin's halvings will occur every 210 blocks as mentioned, and it's all the way until around 2140. I have no idea if I will still be around, probably not. Some of us probably won't be around anymore, but the point is, as years go by, Bitcoin will get more and more scarce. Okay, so I have a chart down here that shows the halvings where I put it out. Not the exact date, but the month at least. Okay, so November 2012, July 2016, May 2020, and the forecasted halving of April 2024. As you can see, prices always tend to go up after the halving. Okay, it's not that I said it, but the price shows it. Okay, according to history, we have no idea what will happen at this line, because I'm not a fortune teller. I don't have a crystal ball. I can't tell where the price will go. But according to history, you can actually see that if you buy at today's price at around 27,000, it's gonna have a good chance of going back up. Okay, and in Bitcoin's previous cycles, it always takes out the all-time high. So, according to history and probability, we have a good chance of earning quite a good amount of money. But of course, all this is just being said for entertainment purposes. So please, do not take my word for it. Okay, I'm just having some fun right here. Okay, so this is the halvings. Okay, but most importantly on everything about Bitcoin is actually the Bitcoin white paper. Okay, Bitcoin is actually founded by Satoshi Nakamoto. I have no idea who he is. It sounds like he's a anonymous dude. But the point is, if you guys want to know more about Bitcoin, you guys should read this white paper. Okay, I'm not gonna go through every single thing here. Okay, and it's not a very long 100-page kind of thing. It's a 9-page document. You can see and check everything out here. It's really important for us to understand and read what we are trying to go and invest in or trade in. Okay, so the rough titles here are the introduction, of course the abstract that talks about a rough summary, the transactions, how it works, the timestamp server, the proof of work concept. Every single thing is all here. Yep, the network incentive. Okay, so this incentive part is talking about producing bitcoins after you mine every single block. So it's linked to this. Okay. Yep. Reclaiming this space. Simplified payment verification, combining and splitting the value, and privacy calculations. Alright, so if you are a coder, you're a programmer, you understand all this, it will kind of like, give you assurances that Bitcoin is actually safe and valuable. Okay, I'm just gonna go through a bit of the extract just to read you through and give you a rough gist about it. So this paper is talking about a purely peer-to-peer version of electronic cash that would allow online payments to be sent directly from one party to another without going through a financial institution. So yeah, we all know about banks and everything, but so Bitcoin is meant to counter that. It's meant to be decentralized, that it will just be transactions between people and people without a middleman. Okay. Digital signatures provide part of the solution, but the main benefits are lost if a trusted third party is still required to prevent double spending. Alright guys, I don't know if you guys know about double spending, but online when you play some games, and then there's like online currency, that kind of stuff. People can kind of like hack the currency and do some double spending. So Bitcoin is trying to prevent that. Okay, so they are proposing a solution to the double spending problem using a peer-to-peer network, and the network timestamps transaction by hashing them into an ongoing chain of hash-based proof of work, forming a record that cannot be changed without redoing the proof of work. So this is why Bitcoin is actually relatively safe and relatively hard to attack, because now the chain is already so long. There's so many blocks that's out there. If someone wants to hack this system and override this entire peer-to-peer electronic cash system, they would have to really go and remine every single block that's out there and produce the longest chain. Okay, so it's talking about this. Okay, the longest chain not only serves as proof of sequence of the events witnessed, but proof that it came from the largest pool of CPU power. As long as the majority of CPU power is controlled by nodes that are not cooperating to attack the network, they generate the longest chain and outpace attackers. Yes, exactly. So this extract is talking about why Bitcoin is so safe. Okay, because so these nodes are actually miners, because at that point in time Satoshi, he just talks about it as nodes. So as long as the majority of CPU power is controlled by miners, they are not cooperating to attack the network. As long as the miners don't gang up together and try to attack the network, the miners will always have the longest chain, and attackers won't be able to outpace them. Alright, so the network itself requires minimal structure. Messages are broadcast on a best effort basis, and nodes can leave and rejoin the network at will, accepting the longest proof of chain as proof of what happened while they were gone. So in summary, basically Bitcoin is really safe as long as no one comes to attack it with the largest amount of CPU power that has been churned up together with the miners. Because as a miner, if you are mining and you are already gaining like bitcoins, why would you want to hack it, man? It's really giving you so much money. Yeah. So unless I don't know, someone is able to get to gather all the miners and like hack the system, Bitcoin will always be safe. And this is why I'm a huge investor in Bitcoin and would like to trade in Bitcoin as well. But of course, everyone has their opinion, so please go and read up this white paper, get yourself familiar. But yeah, that's it for today's video. I hope you guys learned something today, and stay tuned for the next video, where I would most likely start on my trading journey and let you guys see what's happening, and of course be talking about some technical analysis. And also, yeah, I know I did mention in my previous video that I'll be posting videos like once every month or 2 weeks. But then I happen to be free today, so I'll be posting. I mean, that's why I'm posting a video now. But of course, whenever I'm free and I think that it's important to be sharing something, I'll be doing it. So that's all for today, folks. I hope you guys have a good day, and I'll see you guys soon in the next video. Bye.